Another weekday seminar by Quest Trust Company. Today we have Jasmine Willois with us, and we'll be talking about the 4 risks of investing in mortgage notes. We're very excited to have Jasmine with us. She's an amazing speaker and always has really good information. But before Jasmine goes on, I just have a couple of slides to share with you, just a little bit of information about who Quest is and what we do for anybody that just doesn't quite know yet. Let's see, from the beginning, there we go. Okay, here we go. So who is Quest Trust Company and what do we do anyway? So Quest was actually started by 2 brothers, Quincy and Nathan Long. They are investors themselves, and they built the company around the client experience and what customers would really need to make it an easy experience to do these private investments. We are the largest self-directed IRA company in Texas. We have over 20,000 clients across the U.S. So no matter where you're joining us from right now, we can help you. The $350 million in undirected cash is actually a little outdated. I would say that we are 400 million plus now. So really good information for those note lenders out there. A lot of undirected cash to do those investments with. Of course, our disclaimer, this webinar, like all of our webinars, is for education purposes only. Quest Trust does not give any legal, accounting, structuring, investment, or any type of advice at all. We strongly encourage you to meet with your CPAs, your attorneys, tax professionals before entering into any investment, making sure you're doing all of your own due diligence. Okay, so what is a self-directed IRA anyway, and why should you have one? So self-directed is honestly just a marketing term. It just means you are in control, you are in the driver's seat, you tell us what you want to put in the IRA. That's all it is. An IRA here has the same contribution limits, same IRS rules as anywhere else. But here at Quest, we have an open architecture platform where you can invest in private assets like real estate, promissory notes, and private entities, things like that. So some really good benefits would be 1, diversification. So opposed to just stock market, mutual funds, stocks, bonds, now you can open it up to private assets and truly diversify your portfolio. The tax savings, we have various types of accounts, tax deferred, tax free. Make sure you're getting in touch with your IRA specialist to see which accounts can be the most applicable for you. Social investing, I really like this one. Not everybody can get, like a traditional mortgage. So doing like a seller finance note on a piece of property, can let someone really get home ownership, somewhere even in your community. So it's a really nice perk. And of course, invest in what you know best. This is where you can really shine, if you're a realtor or even just have a lot of real estate knowledge or exposure or lending, or you have friends with private companies, etc. All right, so these are the 7 types of accounts we have at Quest: individual plans, self-employed plans, and our specialty plans. I'd love to tell you more about all of them, but we just don't have time today. But please make sure you're getting in touch with your IRA specialist, even if you're a current client, to make sure you're utilizing all the accounts you can for the greatest benefit. These are the 3 main asset classes that our clients invest in, but I would say this is a very short list. Oil and gas, of course, is an asset class as well. And of course, you can do more than just the things listed in these asset classes. Our transaction specialists do hundreds of these transactions every month. So we're well prepared to help you with your investments. Our client portal, we have revamped this, and it is just really amazing. You can now do all of your investments online. Talk to your transaction specialist, submit all the documents. It looks like Domino's when you order pizza, the little tracker. You can see where your investment is in the process. So that's really exciting. Pay expenses, upload FMV. So make sure you're really utilizing that portal. Of course, we love to offer free education like our Tuesday, Thursday class like you're attending now. and we have some happy hours and things like that. So here's another free education. We are having some classes in our offices, the Sidger Social. So for Houston, September 7th, Austin, September 14th, Dallas on the 21st. Make sure that you're signing up for these. These are limited to 50 people per office. So make sure you get your tickets, sign up first. They will be virtual as well. And of course, we ask that if you sign up and then you can't make it, please cancel so somebody else can get that spot. So we will be doing this on a monthly basis. Of course, additional classes. We had the Tuesday, Thursday class, our Saturday noon class, different guest speaker, different amazing topic, our virtual networking happy hour, first and third Wednesday of every month. This is an amazing opportunity. People all across the country with different investment styles and topics can join in, share information about yourself, what you're looking to do, lots of education there. This webinar is actually streaming live right now on YouTube. That's where all of our classes are held. And there's a plethora of information about self-directed IRAs, how Quest works, our culture, etc., on that YouTube channel as well. And of course, we have a Facebook page. So check us out. The special we have going on right now, this ends at the end of this month. So make sure you are sending in your transfer forms. Call us, we'll help you do it. You can see the qualifying deposit amounts on the right and the fee credits you get on the left. So get those forms in so you can get those fee credits. Call us up. We're happy to help with that. Of course, it pays to have friends at Quest. If you are a current client and you refer someone and they open an account, you each get a $25 credit. So make sure you are calling us up, letting us know so we can get that credit to you. All right, we are super easy to get in touch with. Kurt Power, a fellow IRA specialist, is on here with us. He will be moderating for us today. You can use the QR code, chat with us live. It is really manned by the IRA and transaction specialist. We are happy to help you in the chat box. Give us a call, 855-FUN-IRAs. We do really think this is fun and we want to, share all of our knowledge with you. Or of course, email us directly. My email and Kurt's email is right there and we'll put that in the chat box with you as well. All right, that is quite enough for me. You are really here to hear Miss Jasmine speak. So without further ado, Miss Jasmine, please, I turn it over to you. Please take it away, ma'am.
Well, hello. Thank you. How is my audio doing? Can you hear me okay?
Yes, ma'am.
Wonderful. Hello out there. I'm not sure if you guys can give me a show of hands or anything, but I would love to start off by knowing how many of you are familiar with mortgage notes as I get my screen up and running so I can share it. All right. Look forward to talking to you guys today about the 4 risks in mortgage note investing. All righty. You present. So I am located out of San Diego, California. We have an office there in Houston for Sam Houston Parkway, for those of you who are local to where Quest is. And as you know, all of us are very fluid with investing nationwide. And that's what I love about their platform, as well as the mortgage note investing that we're going to talk about here today. So hopefully you can see it. We will not go a step further without saying thank you, a huge thank you to Quest Trust, Kurt, Haley, all you guys. Nicole are very special, have a special place in our hearts. We've worked with you guys for over a decade, and we're just excited to really be here sharing all that we've gained in that decade and working. So let's talk about what we're going to cover and get to the basics. I want to make sure you guys understand who I am, a little bit about the speaker in case I'm new for you guys. What is a first edition mortgage note? Just in case this is the first time you've heard of it, right? Won't get into it too deep, but we will just kind of bring it up, just kind of let you know, maybe a new mindset about it. Then we're going to talk about all the glamour and hype. What is all this about, right? How do we make profit? That's what it's about, the money. We're going to show you some of that glamour through deals. We're going to highlight 4 risks, okay? So we're going to get you excited about it. Then we're going to tell you why to be cautious about it, right? Talk about 4 risks, and then we're going to talk about how it works, and then where to learn more about mortgage note investing. So hopefully that fits into your timeline here and you know what to expect. So who am I? My name is Jasmine Willois. I am originally from New York, if you want to know where all this energy comes from. And I am very passionate about mortgage note investing. My firm, the Note Assistance Program, we have a saying called "Let no retirement account go underfunded." And that's why we are happy to be associated with people like Quest Trust, because again, they are the ones that are helping us build our future, even beyond what our company matching can do, right? So taking charge of your own retirement is what we do. I have a podcast called the Naked Notes Podcast because we are all about education, which again makes us a great fit to work with Quest. If you are interested, you can find on any platform. And the good thing about that is that if you start at season 1, episode 1, it's going to take you from what is a note, how we note, and it actually gradually progresses. So if you're new to notes, that'll be a good educational tool for you to tune into our podcast. In case you've noticed, there's actually a QR code at the bottom that'll actually take you to the podcast as well. Let's dive right into this, right? So some of you may be familiar with this, but let's talk about it. Real bare basics. What is a note? Well, the notes that we buy are first position mortgages. They are on real estate. So let's be clear. There can be first position, second position, and third position, right? You can have HELOCs. There's so many different types of loans and things that you can put onto an asset, specifically a home. What we specialize in is first position mortgage notes, okay? So a lot of you guys are going to call and say, hey, do you have second position mortgage notes? Not really. We specialize in first position mortgage notes, whether it's commercial, duplexes, single family residences, but whatever it is, it's all first position. That's our safety and comfort zone. So getting that out of the way, let's talk about these notes that we buy. The bare minimum, they're going to have 2 things that we are purchasing and that we care about, okay? It's going to be the deed and the promissory note. So when we think about what we're buying, these are the 2 things we're buying. Of course, the collateral file may come with tons of other information, right? The 1003, references, and things like that. But for us, if you ask a note investor in our community, which is affectionately called the NAP Nation, we're going to tell you these are the 2 things that we're actually buying. So the deed, that's that legal instrument that is signed and sealed. It's actually going to, in effect, deliver and transfer the property, okay? So this is your legal right to own the property. So that's what the deed is. So that's why that's important, obviously, right? The second thing, the reason we're all here, is that financial instrument, the promissory note. So that's where I start getting excited and I get my interest in it. And someone with my background as far as I used to work on Wall Street. They have a Series 7, Series 144, you name it. I also a mortgage broker licenses back when I was younger. So someone who really understands this, what I'm here for is that promissory note, right? So the promissory note, that is a financial instrument in which the sum of money that we're buying and that is owed to us is communicated to everyone, okay? So let's talk about what do we do once we get those promissory notes. So as far as the visual is concerned, when we actually wire our money to the seller, in our case is a bank, right? Tell you a little bit about that in a second. But what we get is here on the left-hand side of the screen. It's going to be a collateral file. It's literally a manila envelope full of all the documentations that you guys fill out when you get a mortgage. So for those of you out there, let's pause for a minute and talk about this. If you've ever actually gotten a mortgage on a home, you remember all the paperwork you filled out. You said another piece of paper requesting my name, right? I think you know it by now. However, the reason why they have all this documentation is because in the end, they may more than likely end up selling it, right? And so people like us are going to want some meat in that collateral file, right? And so really, it's another way for them to get a collateral file that's going to be marketable and something that we're going to want to buy. And so that's what we're buying on our end. And this comes with a lot less physical activity than what we have here on the right. And so this is what I used to do. I used to own a company called Wealth by Real Estate Management. And we specialize in flipping homes in Indiana. So I bought and renovated the homes throughout by Butler University. I pretty much anywhere in the city of Indianapolis and nearby, I was flipping homes. And now, thanks to Notes, I buy mortgages in any county and hold mortgages throughout the entire state. So that's also to give you a kind of reach of what I can do now. When we talk about scaling your business with this paper, I can buy throughout the state and not have to exhaust myself. Flipping, it was really better to have a certain regions, right? For those of you guys who flip, you know your crew can only go so far without extending themselves, right? And so what you need to do is find crews in each area, especially if you're going to flip. So for us, the note investing allows us to get that nationwide reach, statewide reach, right? Where it's often more difficult to do so with your traditional flipping model. So hopefully that's clear on what we're buying. We're actually buying paper, that mortgage note. The other way to get it across to you guys is if you have a mortgage, you may remember getting a letter in the mail, right? That said to you, hey, please send your payment elsewhere. Well, that's what we're doing. We are jumping in the shoes of your current bank, right? And now we're going to start sending you our correspondence saying, what are we going to do about either the payments that you're behind and the money that you owe us, or we're going to say, hey, thank you, we're your new bank, and please continue to send us your mortgage payments, right? So that's really the genius behind this, because as you may know, if you are a landlord, there's tenants, there's toilets, there's trash. And so with a mortgage, when you buy someone's mortgage, if their faucet breaks, right, they don't get to call Bank of America. They don't get to call Bank of Jasmine either, right? Or any of the NAP Nation members. So let's talk about why and what we buy, right? There's two forms of those first position mortgage notes. So as you can imagine, this is going to ask you, just by the sake of visuals, which one of these homes, see if we're getting chat. Okay, if you can answer in chat, which one of these homes, left or right, looks like it's performing, meaning that they're getting regular payments, and which one looks like it's not performing? Give you guys a few seconds. I think this is an interactive thing. If you guys can decide which one of these photos is non-performing, performing, that'll be a good way to get your brain thinking about what we're buying, right? And so here's the good news. You never know which one's performing and non-performing. And especially in this, what we may call pre-recession era, it may just be the home on the right? The home with the lawn and the nice house with the two garages. That may be the one that's not performing more so than the one on the left. So just know that the beautiful thing about what we do is we're really focused on the payments, the cash flow, right? And the underlying asset is our security if that cash flow becomes interrupted. Hopefully that makes sense to you, okay? Let's give you guys some examples and tell you a little bit about how we profit. So again, obviously this is consolidated. This is in a nutshell. And so really, if you can just kind of walk with me, we have a program that can actually take you, handhold you through this. But this is what we're really going through, right? First step is sourcing the notes. How do you find these notes? They are very, very elusive. We've got people at conferences walking around like zombies, must find notes. You got people online, hey, I need notes, just willing to talk to any stranger, anybody, just sell me a note, right? So sourcing is a problem. And one of the things that we don't have issues with here in this community is finding notes. Every month we issue and release over $20 million worth of UPB, unpaid balance, fresh inventory, and sometimes up to $80 million worth of UPB. We just closed a tape right now, or actually two tapes, one with some low balance non-performing notes, and then one with a mixed bag of performing and non-performing notes, right? To the tune of over $2 million of UPB that our nation and community just traded. So sourcing, where do we find our notes? In this community, we get them from banks, hedge funds, credit unions, okay? And that is really all we do. We do not buy from private note creators or holders. And that's for reasons that we can express at another time. But for us, what you're going to find here is all of our paper is going to come from small or large hedge funds, okay? And they're either going to come from large or small banks, sometimes smaller credit unions and things like that. So we like to buy institutional paper. We get calls from their intermediaries and they tell us, hey, this is a tape that we'd like to get rid of. And then our nation goes through and starts that due diligence piece, which is really next, right? So we're going to find some notes, going to get them delivered to our inbox if you're part of the community. Going to wake up in the morning, go to your computer and start your desktop due diligence and stuff that we teach you. Then you're going to start negotiating with the bank. Beautiful thing about us, again, is there's no intermediary between our community and the bank. They submit an offer, we submit that directly to the bank, and you are now negotiating back and forth. Once a price is agreed upon, boom, you've got a purchase. And really, that's where Quest comes in, right? A lot of you guys have your money held with Quest, or the money you want to invest with, right? So you're not using your grocery money, your everyday money, right? That way your family's not really feeling a pinch because you want to start investing. So you go and you get some of that money that you may have from a previous job and you may roll over with Quest, right? Believe it or not, that's one of the exciting things about this opportunity is that you can take these mortgage notes and use them with a Quest trust account. So with that said, now you've purchased a note, right? You've got Quest to wire the money, everything's done. At that point, you're going to get delivery of the collateral. We're going to audit that collateral, board it with our servicer, and then you're going to get released to the team. The resources, as many of you know, is probably the most important part of this investing strategy. You have to have the team. You have to know the services. Not all services are built the same way or for the same purpose. Believe it or not, we found that some accounts are served better with different services. Not to mention that not all services are licensed in all 50 states. So remember that, right? So finding the right team, that's very important. And at that point, depending upon whether it is performing or non-performing, okay, you are going to figure out what your strategy is. Of course, before, while all that is going down, you're going to make sure that everything is recorded. Record everything in your name. We help you with that here at the community. And after that, depending on the route, you may go the NOD route with your attorney, right? Start going towards a foreclosure route, getting possession of the property, turning into an REO, so you can in turn flip it or sell it to a wholesaler. One of the things we love doing here. Or again, you can get it reperforming, or if it's already performing, just start collecting that cash flow and it'll go right back into your IRA, which is why this is huge, right? I cannot tell you again, it's better than any company match I've ever seen, all right? So, sounds good, right, Jasmine? Well, what are the ways to lose money while investing in fresh position notes? That's what we're here to talk about, right? What are the risks? So, first risk that we like to talk about, obviously there are tons. We're going to narrow it down to 4. One of the first most expensive risks is going to be taking shortcuts with your due diligence, okay? This is a industry where you make all your money on the front end. That's what we love about it. But all the money that you can make is going to be seen and ready for you, and pretty much ready for you to disperse at that point, believe it or not. So those are some of the strategies we can teach you on how to, extract some of the profit before the exit strategy is completed. But with that said, do not take shortcuts on the due diligence, at least the ones that we provide here. At the Note Assistance Program, we have distilled this down to the very basics, right? Trust me when I tell you, this is all about us having fun, getting the work done, and then going out and spending time with our family. So I don't have any additional fluff when it comes to what we teach you here for due diligence, the brass knuckles, what's going to get you to find out what your true risks are going to be with the investment and what your true expenses need to be. After that, we roll it down to our system, right? So we want to talk about true values. We want to get your budget done. This is an example of one of our budget sheets here. So we're going to put it through a template every single time. Let the numbers do the talking. Everything else gets to walking, right? Gentrification, call that the G zone. We're looking for gentrification in a lot of the areas that we invest in. So you're going to find that our community has taken full advantage of what's going on across America and the middle America, right? All the appreciation in all these little small towns, that's where we love to invest, because this is where the gentrification is happening, a lot because of the pandemic, right? A lot of people are feeling like, hey, let's move where we want now. Let's live where we want. And our jobs are allowing us to do that. So look for gentrification. And then, of course, always have your team in place. It's really, I cannot stress that enough. This is a relationship game. Burning bridges and not being able to go back to people will really, cut on your profits heavily. Talk about a second risk. I'm excited to have your questions at the end, so definitely keep them written down. Second risk, number 2, know your pricing and team limits up front. I want to talk to you guys about negotiations, right? Especially here, because a lot of you guys are going to join these programs where they teach you how to negotiate with them, okay? And so that's a special nuanced thing. They created it, they made it up in the back, one day when they were trying to figure out how the program was going to be. Here, we're going to teach you how to negotiate with the bank. So when you leave here, you run into a banker, that skill set will be valid, okay? And so you want to know in advance what your maximum is that you're going to pay for a note. What are you buying, right? A lot of times you can't trust what's on the tape, so you need to confirm servicing notes, pay history, whether or not it's truly performing or non-performing, and that way you can make your offer appropriately, right? So know your team's limitations as well and strengths, right? Some of us have really strong exposure and a team for bankruptcy notes, right? And so with that said, get it done. If not, know that if it involves bankruptcy, it might be a good opportunity for you to sell it. Bankruptcy notes are often worth more. So the good news is we can teach you here. If you buy a note and it turns into a bankruptcy or they start filing bankruptcy, if you know the right people, you can profit right there to sell it. So bankruptcy notes to the right person is really good as gold, all right? The other things, when we talk about team limitations, condition of the home, right? So maybe flipping out of state is not a thing for you, and you should consider doing, based on the condition of the home, selling to a local flipper, right? So these are things that we're going to tell you to know the limitations, not only of your wallet, right? What you can and can't afford to pay, but also the limitations of your team. So one of the most important things that we're going to teach you here is knowing your limitations and not going beyond them until you can stretch those. A third risk, self-servicers. Now, this is going to hit some of you guys in the gut really hard, right? But we told you we only buy from banks, so we do not buy from private sellers. One of the things I can tell you, some private sellers, they may self-service, not all of them. So you can continue to buy from private sellers, but one of the things I would make a caveat is make sure that they are using a third-party servicer. Okay, that is one of the main ways if your loan is contested that you can lose money. Okay, you heard it here first. So third-party servicers are going to be what we look for. If they do not have a third-party servicer, then that's going to be considered a risk for me. And I just may not even buy the loan, never mind ask for a much lower price, right? Because the servicers, they're going to take care of that compliance and the communication and also give you the confidence so you can move forward when it comes time to take it to sheriff sale, right? Talks to attorneys. So these are the things that we really stress here. And to wrap it up, because I promised you the fourth one's going to talk about deal flow. So we touched base about how critical deal flow is to a successful business. That I don't have to spend a lot of time talking about. I'm sure this room is full with a lot of entrepreneurs. So deal flow equals cash flow for all intents and purposes of this conversation. And so many of you may know people who've gotten that one great note, or they've done 3 notes, but they can't seem to get consistent flow. That's what's going to change your lifestyle. It's getting note after note after note, opportunity after opportunity. So one thing I want to let you know is don't run around and be too desperate for a deal. I see a lot of that at these conventions. Okay. And you can run into some pretty shady, what we call broker jokers out there, right? So make sure that you are not running around being too desperate for a deal and you're not forcing the numbers, right? That's the other thing. We have a budget sheet on our end. Budget sheet does all the talking. Okay. So don't force the numbers. Make sure that you are going back to that budget sheet to balance out all of the risk and make sure that you are prepared financially to calculate for it. Because again, remember, you are coming in as the bank, the responsible party who's going to come here and take care and remedy what's going on here, right? So you need to be prove that you're solvent enough to do that, all right? Last couple of things I want to talk about when we talked about deal flow is just patience, right? A patient buyer is a profitable buyer, especially in this program. So when you're here, we have continuous deal flow. If you don't get the note you are looking for, if the note you're looking at may be out of your price range, like I said, don't force the numbers. Don't get desperate for it. We're going to have a new tape coming out, right? And so a patient buyer is a profitable buyer, and you may find something with better numbers, believe it or not, something that's even going to make your money stretch longer. So there are numerous, okay, to the tune of trillions of dollars worth of mortgages out there. So do not worry. They're all coming down the pipeline. $12 million worth of 12 million count of foreclosures at banks right now. They don't have the staff nor the desire to work them out. Right now, what America is doing, how they have repositioned themselves differently from 2008, is now they have people like myself positioned to buy those notes and make sure that the recession isn't hit that hard when that 12 million drops. It's going to drop into the note investors' laps first. Okay. Therefore, we don't have the big gluttony at the end like we did before with the REO. So remember that. Deals, make sure you have deals with meat on the bone. Touch base on that kind of quickly, because again, if you buy, let me say this. Here we believe there's no such thing as a bad note. There's such thing as a bad price. So why do I start with that? I start with that because what I want to tell you is that part of our strategies is to leave enough meat on the bone so we can get it to the local flipper who's going to do better justice and know exactly what the market needs when they do the renovations. So some of us here do tend to capture all of the profit, and that would mean taking possession of the property, renovating and selling it on retail. However, a lot of us are going to realize there's enough meat on the bone, and we may, depending on the deal dependent, of course, okay, leave meat on the bone for someone else to take care of it so we can just get to our next note. So I'm going to wrap it up by saying you got to have a community that you can buy from on a consistent basis, right? Whether it comes to performing notes, reperforming notes, and even non-performing notes. That is very important, deal flow. So let's show you some of these deals I keep talking about, all right? Live inventory. This right here is a portfolio. It's giving 20% return. Okay, you do your math the way you want to do it. It's giving somewhere close to a 20% return, $3,285 a month. The gentleman who just purchased this just got his check. It was actually $3,300 even for his first payment on this. He paid a little under $200,000 for this. So crunch your numbers and understand the beautiful part about this is that this is what we're doing right now. These are mortgages, all perfect pay. No one has missed a payment on these. So he's pretty confident, and the equity level is very substantial. So when you talk about what are you going to do if you have 200,000 sitting in your IRA, and that's not going to break you, this is a great way to buy yourself a part-time job. Imagine you just went out and got a job at, I don't know, Burger King, McDonald's, but you don't have to show up. You literally don't have to show up. The money's just going to go into your account monthly. And the other part about this is that for those of you who know about the 20% rule, here's the bottom line. Within the next 5 years, he's going to get his money back. So we're playing on the house, right? So when you do the math on things like this is why we invest in mortgage notes. We were backed by real estate. We've got some really good cash flow when you find those performing notes and you get access to this type of inventory, right? And this portfolio has assets in Las Vegas, 2 or 3 in California, 1 in Iowa. And so a lot of these places where we have substantial growth and a really good economy, right? So this is one version of a small portfolio that a individual bought within our community. All right. And here is a list of what was actually in that portfolio. So when you can see, you've got North Carolina, Vegas, few in California, as I promised, Indiana, and Michigan. So we have a solid portfolio there. Let's look at some individual notes that some of our people took down, all right? So this is one in Wabash, Indiana. Now, hopefully a few of you know where that is, but Indiana, great state. I told you I loved it out there. I used to invest doing turnkey rentals out there. Now, if there's a note in Indiana, I'm buying it. This one is in Wabash, Indiana, was purchased 6/12/2020, so a little bit last year. And we started getting our first payment about 2 months later on this one, right? And so the reason it took about that long is because this was a performing note, perfect pay. And so it just took time for the paperwork and everything to transfer. Once the servicer got it, they brought it for $29,000. The trade fee is what I'm paid, so everyone know, full transparency. And so they are now and continuing to get an estimate of $6,000 a year on that, or $502 every month, principal and interest, right into their IRA. Okay, so if you can see, this is why we take an advantage of this stuff. And when we have it, this person was not disturbed. We bought the mortgage while they were sleeping, and now we have an investor who is very comfortable with what's happening to their retirement, and really, every day at work, feeling a little more, a little less, should I say, chained to the desk. Let's go through another, let's try another example. This one's out of Newark, New Jersey, for my East Coast people. Mentioned to you all from New York. This one was purchased November of last year. This is a cool one because this one's really fresh. I'm hoping to get an email today because it's supposed to close today on the 3rd of September, excuse me. And so the unpaid balance was $251. Purchase price was $195. Trader's fee was $5,000, another $200,000 purchase. So if you notice, some gentleman bought, I think it was about 10 or so assets for a performing note portfolio for $200,000. This gentleman brought a non-performing note for $200,000 out of New Jersey. And we currently have, like I said, it's September 3rd. I think that date there is wrong, but September 3rd, we have a buyer for $285 on it. So we're supposed to be closing today, $285. The profit is $62,000 on that one. Give or take expenses, we haven't calculated that, but around $62,000 with all the rough expenses on that. And we did that in a little under a year, right? So being able to take advantage of any opportunity in America is really why I love this, right? And so this is some of the stuff that we're doing here. Single asset right there. That was actually a duplex. Let's talk about this one in Sand Lake, Michigan. This one right here, one of our members purchased in 6/6/2020. So last year, unpaid balance was $40,000. They paid $30,000 for it. Is my trade desk fee. They ended up getting a full payoff about a year later to the tune of $50,000. So they're in at about 32, right? About 13 months later, they collected some income and then they got a full payoff. And so this is really what's exciting about there again, is that these people got the deed to their home. They're done. If they put another mortgage on it, then that's on them, but we can feel good about what we're doing. So one of the things we love to do here is invest, profit, and give. In this case, this man invested in a mortgage note, made some profit, and gave them back their deed, right? Very excited about that. All this is happening in the middle of a pandemic. I think that's what's mostly impressive here. All right. I think we got one last example here. Here's Taylor, Michigan. Similar situation, except for in this one, they did not receive any payments in between time. They bought this as a non-performing note in July. Unpaid balance was 22, paid 13 for it. Here's my trade desk fee. Full transparency. I like to make money. That's what I made off the deal. December of the same year, 5 months later, they got a full payoff. That $29,000, why is it higher? Because it had late fees in it, right? And all the other expenses, because this one was not performing. So they got a full payoff, $29,000. The total expenses that they spent were about $3,600. So they profited about 10 grand off of that, initial investment of 13, including the 3,000 they spent. You're looking at around 17,000 or so. So these are the small home runs that you can hit to make sure that you are changing your financial trajectory one deal at a time. All right. So as we wrap this up, let's talk about how does this work? We are actually buying before the market has access, long before the market. This is what we like to call shadow inventory. So one of the legs up that we have is that we're buying before the market has access to this, right? There are realtors that may drive by some houses and they will do it for years. They will not know how to get possession or access to that house. They have to do it our way, through the note way. So what does that lead us to? Low competition. I don't know about you, but about 15 years ago, I was fed up going to these places with stadiums full of people and, rock stars on the stage. I needed to make money for my family, not party. So the lower competition is what I love about this, right? And just so you know, there are going to be some continued barriers of entry. We talk about this a lot during some of our classes here that our members have with us, but there are going to be some barriers of entry that are going to come because profits like this have to be protected. So just know right now might be a good time to get involved because the competition is still low and they're trying their best to keep it that way. Lastly, if you haven't seen it already, diversification is key. I have just shown you notes all the way from Newark, New Jersey to Michigan to Indiana. So when we talk about diversification within this asset class, it's very possible. Non-performing, performing notes. You got enough to keep yourself busy here. And really, that's what we're doing and how we're taking advantage of things. When we talk about our exit strategies, this is just a few of them, right? But at least 10 to 15 exit strategies. You buy a note, we're going to show you how to get out of it. And that's one of the things that we love about this, because in our opinion, if you buy a flip, you've got one exit strategy. You need to sell that to a retail person. Now, many of you may say, well, you can turn it into a rental. From my experience, because I used to flip, if you have a flipping mentality and you walk in saying, I may turn this into a rental, 9 times out of 10, you've got yourself a rental, right? So you need to make sure that you guys are focused on just exiting and you have many exit strategies. Once again, my name is Jasmine. If you do, you can turn into season 2 to hear about risk and mortgage notes. So I have a whole podcast dedicated to this particular subject, and it doesn't just stop at the 4. So if you go to the podcast, it's going to list an array of ways that you can avoid losing money when investing mortgage notes. Do we have any questions out there?
Hey, Jasmine, we sure do. The first question was actually about the first example that you showed in the slide, in your slideshow. The question is, was it one note or a portfolio?
Oh, so the last one was quite a few notes. So if you have a second, I don't mind.
The first example that you did.
Yeah, I'll go back here and show you real quickly.
Thank you.
So it was a portfolio of notes. Yes, ma'am, of course. And let me know if this is it. Nope, one more. So it was a portfolio of notes. I think it was about 8 to 10, and this is a list of the ones in it. 1, 2, 3, 4, 5, 6, 7. So 8 notes.
I think it was was there one right before this?
This one, right?
This one.
Right. So this is a snapshot of the portfolio, and this is what's inside the portfolio.
Got it.
So it's a conglomerate of 8 different notes, all performing, perfect pays, never missed a beat, well seasoned. I think they're at least all have 20 plus years left, but that means that they've been paying for about 8 or so years. And so these are the states that they're in, and these are all pretty strong. They're all strong cities as far as economics and jobs are concerned. Hopefully that answered your question.
Thank you. And then the next question is, does your company find the wholesale purchaser?
A wholesale purchaser. I don't know that I understand that.
I suppose the question is like, does your company find someone to buy the note, a note buyer if you're looking to sell a note? I'm guessing that's kind of what they mean.
Well, if you have an opportunity to clarify, that would be great. Otherwise, if that's the case, we have a lot of seasoned members in our community who you can approach to see if they'd like to buy a note. So that's one of the beautiful things about our community is that they are taught the right way to do their due diligence. So if you are from an outside community and you have a note that you think one of our members could benefit from, then 100% go ahead and let us know. I can tell you right now, they're just going to put that note to the same due diligence they do everything else. But a lot of our members buy outside of our community. Yes.
Okay, perfect. Thanks. And then we actually have a few questions asking, what is included in those total expenses that was in all of the examples? What makes up those total examples? Is it like property taxes, insurance?
All of that. I mean, I could do a whole different, if you have me back, I can do a whole different educational podcast on that or webinar. But yeah, it's quite a lot. Everything's going to take you from beginning of foreclosure to the end. So all of your ancillary costs, right? Including your attorney fees, including 1 to 2 years worth of taxes. So we budget based upon the timeline, right? So most of our notes, we're going to think it's going to take us on a short end, 6 or 8 months. On the long end, it could take 16 to 18 months. So when we talk about what's in that budget expenses, they are a year or 2 years worth of expenses for everything. When you talk about FedEx, right? How many times am I going to have to FedEx my attorney? So all those little things down to, again, just fines and stuff from the city. So yes, fully inclusive. And this is what we go through in our program from head to toe.
And is that held in an escrow account?
No, not at all. So when you own the note yourself, you are going to take care of that just out of your own leisure. Unless you're doing a joint venture, then maybe you may have an escrow account for your joint funds.
Okay. After you get REO, I assume what they are asking. I'm not real sure what that comment. William, if you could clarify that, we'd be happy to answer that. What are some examples of expenses after the payoff? I think we went over the expenses. Same, what's included in total expenses? I assume property taxes, insurance would all be included in that. Do you suggest learning notes if you are not able to purchase first position notes? Why do you not like second position?
So to clarify, I love second position notes. I just don't dabble in them because I find, here's what you will understand. Regardless of the lay and the cowboy hat, I'm very conservative. All this risk stuff is on the outside at the good time parties. When it comes to my investing, very conservative, right? So second position just are too risky. I used to day trade on Wall Street during the .com era. Believe you me, trading mail.com and all that got all the risk out of my body. I had a child, and at that point, all I want to do is make sure that I am in first position. So what I love about first position is that I'm only worried about two things, just like the rest of us. We have two things we can do. We have to do, right? Pay taxes and die. So when it comes to first position, I'm worried about the tax man pretty much only, unless I'm in a HOA super state like Florida, then I'm worried about a HOA. Again, second positions are great and they're you can profit from them. Bottom line is that you are second to me. So there's another person you have to worry about. I prefer not to. I just want to worry about my kid back there. And then more importantly, really what I want to wrap your head around is, what do you mean by you can't afford a first position note? So I do know that second position notes are known to be less expensive. Fun fact, that pricing in that market has completely gone wild, okay? It's no longer a place where you're getting 10 cents, 20 cents on a dollar. So get that out of your head. The second thing is that mortgage notes, this is one of the most amazing things that keep people out of this community is they think they can't afford it. There are mortgage notes across the nation. And so you just saw someone buy one for $13,000. I sold one the other day for $4,000. Okay. If you can imagine that there are notes in Arkansas, in Gary, Indiana, where the balance is only, not everyone has a $250,000 mortgage note. So I'm going to leave you with this just in case I am picking up the tone that I think. My grandmother told me this: if you have a problem that money can solve, you do not have a problem at all. Okay. So come see us, because at the end of the day, you listen, the money is not an issue when you have assets with these type of returns. We will teach you how to find the money to come to you. Quest right now is your biggest resource. If you have a real deal, I can't tell you, package it up and go to one of their events.
I love that. And Jasmine, we have a couple of requests too for your contact information. How do they get in touch with you? How do they enroll in your program? Do you have a slide with your contact information you can
I
put
did
up?
not put that on there because I didn't want to sell today, but my assistant is here, Latrice. She's in
She
chat.
just put the email in. Latrice, can you put a phone number? Oh, perfect. You read my mind. And if there's a website that people can go to, if you could put that in the chat box, that would be amazing.
I will leave you with this. We are having our last event of the year. So I teach 4 times a year. You're going to get all this splendor and energy in real life. So my last time to teach is going to be this October in New York City. Okay. Right there in the Big Apple. We're going to have a blast, as you can imagine, but we're also going to walk away with money. There's going to be live inventory there. So if you want, you can actually leave with a note and a JV partner, and it's been done before. We're going to show live inventory. We're going to teach and have some of our very special vendors like Quest to come there. And I've had people leave our meetings, set up a self-directed IRA account, find a JV partner, and get a note all before the weekend is over. So I'll meet you in New York City.
That sounds amazing. Thank you so much, Latrice, for putting all the information in the chat box. That sounds like such a fun event, especially in New York, one of my favorite cities in the country. Thank y'all so much for being here today. It's always a pleasure to hear the information that y'all have. It's really so interesting to learn all this information about notes, a very fun and interesting asset class we can invest in here at Quest. Everybody tuning in, thank you so much for joining us for another weekly webinar. We love having you. Please join us again Saturday at noon. We'll have another class, or we'll see you back next week. So thank you again for joining us. Have a wonderful rest of your day, and we will see you next time. Bye, guys.
Bye-bye.
Working on it.